Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. Today we take a look, as usual, on the technical picture on the euro currency, and also apply the cross-market analysis to understand what's going on by the performance of the dollar index or the 10-year bonds, as usually we do, because it could give us some more clarity on the background. So in general, generally speaking, the bearish signs and bearish activity here on the euro currency is not a surprise, because in the weekend we said that generally, if you remember our initial plan, that we said that first we will trade the pullback, then we will start watching for bearish signs, because downside retracement is promised to be more extended. At least by the technical background, it looks in the current moment absolutely reasonable. The market hits a few important targets, major OP on the monthly chart, completed free drive on the euro currency, and that's really a very healthy background for a possible deep retracement on the larger scale. But with the appearing of the grabber here, we said let's see what will happen, because grabber suggests taking out with the stop, and actually it might even change the bearish plan, so some different pattern might be formed or something. But you can see by the recent performance, the grabber has disappeared as fast as it has appeared. So with this collapse recently, this is absolutely not normal and natural performance for a potential bullish market, and I would say that here is actually the back of the bullish background has been broken with this downside deep action. What does it mean? It means that here we definitely will get something to the downside, some continuation, but at the current moment I would stay focused on the nearest targets, just because right below the market stands strong support. It's an area between 117, 1716, so you can see this trend line, confluence support. And yes, maybe later we will get some big downside extension or something, or maybe market will drop as low as to the 114 points, because this is actually the minimum target of the free drive. But the downside action hardly will be straightforward. So existing of this confluence support suggests that probably here we could get more or less significant pullback, especially after the more or less extended upward actions. Some upside momentum exists here. So if we will get something like more extended here, probably it will be kind of the ABCD or something. So here might be significant pullback. That's why for now I would just watch for the targets that stand somewhere around 17 area or slightly higher. But first let's take a look at a bit more extended thing. So if you take a look at the dollar index, you can see that here, if on the euro currency market still stands in range of this previous grabber pattern, here on a dollar index you can see it's already extended this range, so it's already stands above the top, which means on the euro currency market stands right there. So on dollar index we see some more extended performance. And now if you take a look at the 10-year bonds, actually we've got their bullish reversal candle on the yields. It means that yields will start moving higher. This actually together with the reversal of the dollar tells two things. First of all, this is not a safe haven demand, because otherwise we will see that the yield should keep going lower. But here we see simultaneous action as on the dollar as on the yields. So it might be the echo of some liquidity problems that we discussed in a weekend. This will be a long-term story, and it will be last for a considerable period of time. Maybe it will get some really extended impact, gradual impact on the dollar liquidity and the performance of the dollar. But it might be really very important moment in general for performance of the whole Forex market. Because just to remind you what this actually yellow rectangle means, if you take a look at the quarterly chart, you will see that on 10-year bonds we have very interesting stuff. We have pennant after the significant upward action rate, so which is by itself usually becomes a continuation pattern. And second, we have the bullish grabber here, suggests that yield should return back somewhere to the 5%. And if it indeed is based on the liquidity problems that I'm speaking about, this reversal week that we have here might become something more than just minor candle on the weekly chart. So I'm not ready to say it right now to confirm it, but I can't exclude that this might be the starting point of something bigger, which also could trigger the deeper retracement on the euro currency. Because technically, as I said, on the monthly chart, as we talked about, your market hits very strong resistance area and major OP target, this ABCD. In fact, we have the guarded steeplets here on the monthly chart, and even pull back down to the 113 area or even lower, 30% retracement. It's absolutely normal for the market, although on the daily chart it might look like the disaster, but it will be just a minor retracement. So taking it all together, in the current moment, I will be very cautious with the bearish performance, watching for it. And in the current circumstance, I wouldn't consider any bullish positions here, at least on the daily or higher time frames. Maybe it makes sense, or at least we could consider some bullish patterns around 117 area just for a bounce. But in general, context now stands bearish, and it's safer just to watch for pullbacks and consider chances for taking the short positions. So first of all, for instance, on the full time frame chart, we could get lots of different patterns. Here as I draw the butterfly, because it has 127 extension around 117 precisely. So it could lead market and prepare for possible retracement that I was speaking about. But here you also could find a lot of others. So if you remember, here we have inside ABCD pattern, right? So that we discussed in the weekend. Something like this, where we actually decided why the market should show this pullback. It's OP 117.10, right? So it also has more extended 1625 next OP. Also in a larger scale later, maybe not for now, but later we could get something like big ABCD here, if it will take this shape in the market, or maybe even bigger ABCD with this pullback. On the hourly chart, we could get the pattern based on precisely on the engulfing, on the evening star pattern. So just didn't mention it, but market with the rectangle. So here actually, as a result of the recent performance, we have evening star. It suggests usually some kind of the intraday ABCD performance. And on the hourly chart, it might be some retracement first, and then we could get another A, B, C, top, D pattern to the downside. So that's what we have currently on the table in euro currency. So context remains bearish, just as a bottom line. In the current circumstances, I wouldn't consider taking new longs because market stands not at the support yet and hasn't achieved any important targets to the downside. Currently, it makes sense to watch for possible retracement and then think about taking the short position around predefined levels depending on how this performance will happen. And focused on possible downside target around 117 and in general on the conference support. That's a trading plan for today, tomorrow session probably. Then, based on reaction, what will happen around it, we will see whether it makes sense to take long position or better to not do this, because who knows, we just could get straightforward action like on the hourly chart. So if you remember yesterday, we talked about taking possible bullish positions, but you can see market just has given us no chance because no response on the levels has happened here. This supports as we considered yesterday. There's no reaction at all, it's straightforward breakout. So that's what we have currently on the euro currency. Let's keep watching what will happen and return back to this question tomorrow.